I'm William Grantham with IchimokuWeather.com, and today we're taking a deep market analysis of Vanguard's Information Technology ETF VGT. That's Victor Golf Tango. It is a large cap technology ETF, and right now it's having a little bit of problems because of inflation woes. We can see here on this article from the Wall Street Journal that the NASDAQ composite is moved down fairly sharply over the last 3 days, and it does say that U.S. stocks fell Wednesday, giving the Dow Jones Industrial Average and the S&P 500 their steepest 3-day declines in nearly 7 months after a sharp rise in consumer prices heightened concerns that interest rates could be heading higher. All right, so now if interest rates are heading higher, that means it's going to have a harder time for some of these technology stocks to continue with their upward growth, especially with having the chip shortage that we have coming in right now. So if they're coming down and you are wanting to get in after they turn around, how do you know when they're turning around? That will be our focus today as we take a look at Vanguard's VGT. The biggest ETF in this space is QQQ, so we're going to take a look quickly at how the QQQ and VGT compare to each other. First off, we can see that on the expense ratio, QQQ is at 20% and VGT is at 10%, so it's half the price on the expense ratio, which makes a big difference if you're trading large funds. Now, QQQ does have a lot more funds under management as well as higher volume going on, so it is easier to move in and out of. However, VGT is also a fairly well traded. QQQ is the NASDAQ 100, and it currently is holding 103 stocks, and VGT has quite a few more at 334. This comparison between QQQ and VGT is available at etfdatabase.com, and you can see the URL right here, and this will also be posted within the description down below. ETF Research and Analysis website at etfrc.com does have an overlap tool. I'll leave the link down below as well. And we can see in this overlap tool between QQQ and VGT that we do have 38 overlapping holdings. So 11% of VGT's 334 holdings is also in QQQ. So you could purchase both of these ETFs and have a bit of a carryover, but not 100%. Right now, they overlap by weight at 47%. This is a ratio chart between VGT and QQQ, and they pretty much trade very similarly, and that's the reason why you see these candles grouped the way they are. However, from 2005 through 2015, it was going down, which means the second symbol was doing better, and that means that QQQ was doing better through that 10-year stretch. But then from 2015 up through 2020, it looks like VGT was doing slightly better. Right now, the blue line and the red line have gone fairly flat, as well as our future cloud, which shows that they are trading almost exactly the same at this time. So you could go into either one of these. It's your decision. This is VGT on the daily chart, and we do have a Kumo breakout to the downside that happened today. So right now we are trading below the daily cloud. We will go into a little bit more detail into Ichimoku on the daily chart, but first we're going to take a look at the weekly. On the weekly chart, we can see this sharp downfall right here, which is the COVID dip, where we had a big market fall. Then market action was able to get back above the cloud, and then in May, we did have a bullish channel begin where the blue Tenkan-sen line moved above the red Kijun-sen. So while we have the blue line above the red, that is a bullish channel, and it is to the upside, and we can see that pretty much price rode on the top of the blue line for quite a ways, came down and touched the red line here just a little bit in March, and then was able to get back above the cloud, and now has come down and is touching the red line again, and is even underneath the cloud at this point. Now this candle is in the midweek, so it has not closed this candle yet, so we don't know if it's going to close below the red line or above it. If we do close above the red line, then that could be an indication of market action stalling here from the inflation woes and is starting to turn around. However, if we do close below the red line, that could be the start of more of a downtrend. There is information on our weekly chart that shows where we could have a downtrend too. First off, we have the top of the cloud here. And if we put in a line at the top of the cloud, we can see it is almost directly underneath where we're at right now. And so that will be our first line of support directly underneath us. The red Kijun-sen went flat here for quite a way, so it's going to be our next support line underneath us. And then we have another flat line right here coming out of the first of the year, and that's going to be our next flat line. And that's going to be our next support underneath us as well. This support line does correspond to where the bottom of the cloud is at this time. If market action does come down and come inside the cloud, we do have some more support way down here that we hope we don't see. And if we do, then we'll be watching for hopefully a stall and a bounce at these levels. Here are our support lines brought over onto a daily chart so we can see where they are at, and we can first line is directly underneath market action right now. So we'll see if we have any kind of stall at this point. If we fall beneath it, then it'll go from being a support line into being a resistance line above us. We do have the black line down below. That is our 200 period simple moving average. And there is a slight chance that it can provide support as well if market action does come down and challenge it. Taking a look at our first support line coming into the first of the year, we did find support at it a couple of times. And then again here at the mid-month on January, then we had another support level here and here and here. And then finally we're coming down and we're going to see if we have the support level here. Our first lines of resistance above will be the top of the cloud here. And then above that, we're going to have the top of the cloud up here, which will also be a resistance line that we would like to see ourselves get above. On the daily, the blue line has moved underneath the red line. Now, the blue line is made up of calculations that look back 9 periods, take the highest high and the lowest low, divides it by 2, and then it plots the line here. So it's just taking previous market action and giving us an indication of what could possibly be support or resistance in the future. Right now, that line pointing down shows that we do have momentum to the downside. The fact that the blue line is underneath the red line is another sign that there is momentum to the downside, and then the red line being pointed down is also momentum to the downside. The red line looks back 26 periods, takes the highest high and lowest low and divides it by 2, and then plots the line here. So if we see old market action starting to drop out of the calculation, if the market action continues to move down, then that's going to give new information to the calculation that will make the red line draw in a downward angle. The lagging green line is market action plotted 26 periods in the past, and it can show us momentum one way or the other. Right now, we are below old market memory, the Ichimoku cloud, and the elements, and so that does show that we are free and clear to the downside on a daily chart for our lagging green line, and that is momentum to the downside as well. Our future cloud did go from the red into the green at this twist point. We call this a Kumo twist. The cloud is called the Kumo, and that translates to cloud. So we call this a Kumo twist when we see the colors go from one to the other. Now, we did have a fairly decent green cloud here, and it is getting smaller here up on the front end as market action continues to come down. Our bottom line of the green cloud here is the same as the top of the red cloud here, and that is a calculation that looks back 52 periods, takes the highest high and the lowest low, and then projects it forward 26 periods. The other line on the cloud takes calculations based upon the red and the blue line, the 9 period and the 26 periods, combines them, and then projects that forward 26 periods. And so that also shows us what's going on with the combination of the blue and the red line projected into the future. Now, these become mean lines. So our biggest mean line is the 52, which is shown right here with the flat bottom of the cloud. Price likes to return to the mean. Well, at least we hope so. This time we're hoping that it comes back to the mean line and then gets above it and then challenges the top of the mean line here. The cloud area itself is an area of resistance when you are below it and support when you are above it. So right now we are below the cloud. So the cloud being above us is resistance, and it is a movable resistance zone that shows us areas that price action might have a hard time breaking through. So what if you were wanting to get into this stock as it's starting to turn around? What are you going to be looking for? Well, the first thing we're going to be looking for is for market action itself to stall a little, go into a consolidation zone like we see right here, and that could happen at the 200 period moving average or at one of our support zones here or somewhere in between. The support zones doesn't mean it has to happen there. That just means that there's a probability of the propensity for a stall in market action at these lines. The first positive sign will be for market action to go up high enough to challenge the bottom of the blue line. Once market action goes to the blue line and gets above it, then that is a first possible signal to get back into the stock if you're trying to catch the falling knife and wanting to buy in as it's starting to turn around. Now, it might touch the blue line, it might even go above and then continue to go down. The next thing we're going to be looking for is for market action to get up to the red line. Now, this could be happening down here underneath the cloud in a few days. It doesn't necessarily mean it's going to be happening right up here over the next few days. So next thing we're going to be looking for is market action to get up to the blue line, then to the red line, and then for market action to get above both of them, and then stay above them long enough for the blue line to be drawn above the red line. So if you're wanting to get back into this stock and you're wanting to do it with dollar cost averaging, you can make your first trade when market action gets above the blue line. You can make another trade when market action gets above the red line, and then you can do another trade when market action is able to pull the blue line above the red line. And then at that point, we should see market action starting to challenge the cloud. As soon as market action gets up inside the cloud, that could be another signal if you are wanting to incrementally be getting back into this stock. And then, of course, when market action gets above the cloud, being above both the red and the blue, a situation like we see right here, market action is above the cloud, it's above the red and the blue. The blue is above the red, and we are starting to move up. So this would have been a bullish Kumo breakout to the upside, and that's what we're going to be looking for in the future to be able to see when market action is back into a long-term bullish trend. We could be at the very beginning of this inflation period. What if you're anxious and you want to get in, but you don't want to challenge it too quickly? Well, you could take a look at an inverse of this particular stock. SQQQ is the opposite of QQQ. It's the Ultra Pro Short QQQ put out by ProShares. We can see right now that we have gone down and had a bottom out right where we had the top on the VGT. We can see we have the topping action right here. We have a high of 388.73, and on SQQQ, it's going to be the opposite. So it put in a low at $10.44. Now we can see what's going on with this starting to turn around. Market action has moved up above the blue line here for a little bit, and then it was able to get above the red line and the blue line. The blue line and the red line are kissing, and they are starting to separate as the market action is being able to help redraw the blue line above the red line a little bit higher. Now, right above us, we do have a cloud, and that is going to be instrumental for being able to get above, to be able to see a short action, and it might be prudent to wait until we do have a break above the cloud to get into this particular ETF if you're wanting to take a chance on this tightly traded entity. Now we can see right here where market action came up and tried to get outside the cloud, was not able to do so, and it came up and tried to get out of the top of the cloud again right here before being beaten down and falling underneath the blue line and the red line, and now we're coming up and getting ready to try it again. So the first thing that we're going to be looking for in this one is for market action to get above the blue line. Check. For market action to get above the red line. Check. For the blue line to move above the red line, that's almost happening. And then for market action to challenge the bottom of the cloud, get inside the cloud, and then move above the cloud. Now, trading inverse ETFs is a special game, and you need to make sure that you know what you're doing. So don't take this on a whim. Make sure you research and you know what's going on before you take a trade going the opposite direction. It trades a lot tighter. It's 3 times. It's a 3x, and that means that your average trading range is a lot tighter, and your risk reward could be a lot tighter as well. So it's not quite as forgiving as getting into QQQ or VGT. So be cautious out there if you decide to trade this, and it's also not prudent to trade this on the long haul because its expense ratio is 95%. So there you have it. We have inflation coming in, and that could spell a longer downtrend in technology stocks, and that can make our ETFs QQQ and VGT continue to move down for some time. We will be watching for when they start to turn around to see good opportunities to get in, to be able to ride them back up, buying the dip. I'm William Grantham with Ichimoku Weather.com. May your setups be true, your winners run, and your losses small and few.